of Yellow Tunnel, and today we're going to have our weekly strategy roundtable where we talk about current market conditions, escalation in tariffs, current market pullback, how far it can pull back, and where the opportunities in the market, and how do you hedge your portfolio from further pullbacks. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account, based on my own risk tolerance level for general education information purposes only. All right, before we go into trading psychology, let's talk about current market conditions. So, most important chart is, let's look at the weekly, I would say yield, right? 10-year yield, 2-year yield. You can see that the 2-year yield actually is not selling off, but the 10-year yield has rallied and it touched 430 level, which happens to be the level that was the high in the 2022 sell-off. So we picked the pullback in October, November, reached 4.3 level. That's been an important level for a few years. We've been trading in this downtrend. We broke above that level, 4.2, and now trading 4.3. So if there's no agreement or de-escalation in the tariffs, right, then potentially the path of least resistance for the yield to continue going higher. I mean, obviously, one day doesn't set the trend. You want to see a follow through, but so far you can see we reached 430, pulled back a little bit, and that's the most important chart I would watch, right? If the yield continues to grind higher, 435, 440, then my assumption is going to be that the VIX is going to be break above 20 level, because we're right at the 20 level. It's still considered to be kind of a borderline between panic versus normal buying conditions or selling conditions. So VIX is at 20 at important level, kind of junction. 10 years at the important level. So far, let's see. The market, the pullback predominantly in semiconductors, they're leading the pullback, and QQQ. All right, semis are down almost 2%, QQQ 1.5%. Small caps are actually outperforming, at least for now, right? They've been down close to the QQQ level, but that's been the theme in the past couple of months, where small caps and regional banks are outperforming large caps and especially technology. You have silver making new highs, gold making new highs with uncertainty in the market, and gold miners, right? That continues to grind higher. Europe is down 1%. Platinum is up 6%. UNG gas is up 19%. And Bitcoin, big pullback in Bitcoin. Again, we're retesting the recent lows. Another chart I would watch, right? If the VIX is going to jump above 20 and yield goes above 4.3, I think Bitcoin breaks below the 84,000, and next level would probably be 70,000, right? 80,000 and 70,000. 80,000 would be 2025 low. So next level important would be 2025 low, which is around 80,000. What else? So we talked about yield, we talked about Bitcoin. I mean, NVIDIA, semiconductor, NVIDIA is making new low for 2026, and next level, if this level doesn't hold 170, again, 2025 lows. QQQ, for now, holding the January lows, right? It's holding January lows. If it doesn't, then the next level would be December lows, which would be 600 level, psychological level. A lot of positioning around 600 level, but then the next level is October and December lows. So as long as the QQQ above October, December lows, I think, you know, this is just kind of a normal we're in consolidation phase, right? Kind of a trading in this, you know, descending wedge, right? But if we break through October, December lows, I think that's when the sell-off could accelerate. we're still maybe 3% away, 2% away, 2.5% away from those levels on QQQ. And the most important is SPX. Right? Let me see, can you guys hear me? Okay. And then the most important is SPX, right? This is where all the majority of the positioning you can find. Where's my SPX? So we are trading at 6,800, right? So 6,900 didn't really hold. We broke below that level. We're at session low, testing again 2026 low. And the next level would be if the 6,800 doesn't hold, right? If this level does not hold, the next level would be 6,700, right? 6,700, that would be December lows. Right? So that would be an important level. So for the bulls, it's important to hold on to the 6,700, right? If we can hold the 6,700, that opens the door to retest of December lows, which is around 6,500, and it would be, I mean, October lows. So November, October lows is 6,500, and then December lows are at 6,700. So the bulls want to hold on to 6,700. If you look at our model, right, aggressive power trader model, and you look at the SPX, I mean, this gets posted every first of every month. So it doesn't see a lot of momentum below 680. But now that we do have escalation in tariffs, the kind of a new information, the model will adjust, right? And potentially we can get much lower. So if you look at the positioning, and plus expiration, right? We have 2/3 of the contract expire in January. Now people are kind of caught off guard. We're trading in negative gamma, right? Gamma flip point is 69.50. We are trading way below that, right? The current price is 68.30, right? 68.30. So negative gamma usually means when the price is below gamma flip point, dealers are considered net short gamma, and they have to hedge by selling the stock. So the sell-off could accelerate. Right now, let me see, I'm selecting all dates. Most of the gamma actually resides in October expiration. So October has pretty decent hedging, about, call it $60 billion. We're in October, in November, February, sorry, in March expiration, 60 billion. And in February expiration, about $30 billion worth of contracts. You can see people are already buying January 30, 22 billion in January 30. So people are hedging, but majority of hedging is March. And again, 7,000 is a very important support, overhead resistance. But on the downside, right now we are right at the 6,800, right? We're 0.5% away from 6,800. And you can see below 6,800, there's not much support. I mean, there's some support at 6,700. I mean, some of them is 66.50. So if the 6,800 doesn't hold, we could quickly drop to 6,700. And again, based on escalation or de-escalation rhetoric, we could retest November, October lows. Okay, so let's look at the positioning. Let's look at March expiration. February, there's not a lot of position. We'll just go into March. So volatility picked up. All right, so by March, based on the current supply and demand, so there's some kind of an agreement between, about the Greenland, between European Union and United States and Britain. And, we're still in the earnings season just started, right? Another unknown is earnings season. So far, it's mixed results. Banks, the results are underwhelming, right? The investment banking were strong. We have Netflix this week. I think Tesla earnings are something to keep an eye on. But if the earnings are better than expected, especially from the AI stock, then we could have scenario number one. Scenario number two is trading in this range. Maybe we will revisit 7,000, right? but we're trading in a range between, and it shows 6,500. So kind of October, November lows is scenario number 2. And this exercise is important because trading is, about distribution of possible outcomes, right? So right now, based on VIX jump into 20, one range is November, October lows, and all-time highs around 7,000, maybe even 7,100. And then scenario number 3, if there's escalation as a result of Greenland or even China, right? We still have to, I think in January, they're supposed to review if China is following their promise on, on tariffs and buying, US products like soybeans. And if they don't, then maybe there's escalation, or there's no agreement with European Union, and AI stocks are not very supportive, or AI earnings don't justify the current evaluations. Then you have scenario number 3. So how many of you say scenario number 1? We're going to retest new high or make new highs, right? Somewhere between 7,000 and 750. Scenario number 2, we're trading in a range between October, November lows and all-time high 7,000. And scenario 3 is signs of recession, maybe unemployment jumps, maybe tariff escalation broadens to China and other countries. But that would be scenario number 3. All right. So how many of you say 1? Jeff, what do you think? Alex, welcome back. Alex, Alan, Archana, welcome back. David, Jeff, Joe, Dr. Simon, Ronald. Alex, 2. Okay. Jeff? Everybody else? So 2, I also gonna go, at least for now, we'll say 2. Obviously, things can change very quickly, right? Based on the, there's a meeting in Davos, right, in Switzerland, where Trump is gonna give a speech, I think, tomorrow about the view. Based on that speech, I think we'll see if there's an escalation or de-escalation. All right, I assume it's probably going to be escalation. So, but at least as of right now, and based on the 2018, right, in 2018 when there was an escalation in the tariffs, right, I've been using this chart quite often. I thought that, it'll be the repeat of 2018, where escalation started in September with China because of the 6 months deadline. It didn't happen this time, right? It seems like instead of September, October, it's moved to January. But we did have, as a result of escalation 2018, basically, 10% pullback. Then there was a policy mistake by Powell, so that created another 20% pullback in 2018. But tariffs alone was 10% pullback with China. So my thought is that's kind of your benchmark. European Union, took a few months to resolve this. Maybe it's 5 to 7%. But that's kind of a playbook that maybe you can follow, right? And we were actually looking at the odds, right? So let's go to Vanguard and pull up Winston. So if I open up Winston and say what are the odds of reaching Greenland over Greenland in the next 30 days? So just looking at the betting markets, like Kalshi and Polymarket. So prediction market studies and diplomatic seal paints a clear picture while the US pushed the green and Kazakhstan, immediate consensus is elusive, right? Immediate consensus is elusive. So date of estimate by year end, Polymarket 17%. by 2029. 41%, but that's far away. Within the next 30 days, Kalshi 9 to 17%. So the betting market basically says, within the next 30 days, there's literally maybe 10 to 20% probability of reaching an agreement. And these things do take time, right? And usually there's escalation. We've seen this in April, at least a couple of weeks of escalation, and then de-escalation happens. So in a few weeks, especially if people are caught off guard and not hedged, then that's where the September, October pullback, I think, is not far-fetched. And obviously, if we break October, November, then that opens the door to 2020, start of 2025 high, which is 6,200, right? So if there's no de-escalation next 30 days and earnings kind of mixed, like we've had so far, then potentially you could get to the 6,200 level. Any questions on the odds? Greenland, tariffs escalation. All right, so that's how I would position. So how do we help on yellow tunnel? So we have different services. Aggressive Power Trader gives you short-term signals based on AI model that runs every single day, and it gives you a list of stocks that can outperform the market. Today we have FCX, right? So FCX, let's look at FCX. Right, precious metals are up, copper is up, so it's doing a good job. Despite the market sell-off, people are still investing in copper, right? Kind of hedge it for uncertainty, even though copper is more of an industrial. Metal usually sells off during a recession, but so far it's doing well. So copper is one trade idea, GEV, right? Also doing actually pretty well despite the market sell-off. So model is doing a good job giving you signals, short-term signals that can outperform the overall index and its peers. So people still investing into, this is more of an AI play, utility, right? And PNC is another regional bank announced earnings. And actually PNC also outperforming the market, basically flat for the day. So that's the intention of the aggressive power trader model. And you can see the signals for today and overall where the spiders is. It gives you prediction, buy and sell signals. Copper, if it reaches 58.71, this is good buy signal at $60. You might want to maybe be more patient. So it gives you buy and sell signals for the current trading session. It gives you also the trend analysis for the next 10 days. Sees more upside in 10 days, but it shows you that long-term trends a little bit overbought. Plus, FCX, I think, announcing earnings this week, so you have to be careful. And we also give you AI analysis where you can type in NVIDIA, you can type in Apple, and make a prediction for the stocks that you trade in, outside of our signals. So that's Apple. We have a recording where Keith and I we have a morning bell and a closing bell. You can always look at Keith Harwood. He's joined us 2 years ago from Options Hotline. So I encourage you to watch the recordings. And you can see if I did any orders in this symbols as well. If you look at the weekly power trader, similar approach, but the model takes longer term view. It runs only on Sundays and analyzes more data. Daily fluctuations don't impact the results as much. And you can see utilities, ED is another. You can see utilities are also doing better than expected, better than the rest of the market, up 78 basis points. And then same thing, copper. So long-term, short-term trends, that's what you can find in weekly power trader, along with same AI analysis, live recordings of the live trading room that I encourage you to view. And then we have different active workshops on different topics. You can look at volatility skew. You can look at technical analysis, how to trade options. And then finally, if you want to see what I trade today, you can look at dynamic power trader. So as a hedging, right, today it's all about hedging. I actually put a put spread. So I already had a call spread going into the event, right? Because the market was overbought. 7,000 was a large overhead resistance. I did not know about the tariffs, so I did. Let's see, 25. should be a call spreads. Orders. Sorry. QQQ. Okay, so January 8th. So going into the event, I sold the call spread, 635, 640 as a hedge for overall portfolio with the anticipation that 2 to 3% pullback. But now that we have a potential larger pullback on its way, so I'm going now into March and buying a put spread, 600, 580. Put spread was the idea that QQQ will pull back, it will break the year-to-date high, right? It will get either to December lows or October, November lows. So dynamic power trade is where you can actually see stocks that I trade, right? I have Amazon position, Cisco position. So I'm using QQQ as a hedge for these positions. And I have a small position in Palantir and TJX, right? So try to build different exposure for different sectors, and you can follow my orders, you can follow my position, you can enter a phone number, and then you would see last week I trimmed, Morgan Stanley, I closed Morgan Stanley position, I closed RTX, I trimmed, half of my JetQ position with the idea that, I'm going to have 30, 40% of my portfolio in cash and wait and see if the 7,000 will or will not be broken. And since we're unable to break 7,000, especially with the recent news and expiration week last week, the path of least resistance is, short-term to continue going lower. Any questions on dynamic power trader? Last week, earnings started. I did JP Morgan earnings that actually worked out well. This week we have General Electric, Freeport McMoran, Copper, Industrial, Schlumberger, oil drilling company, all announcing earnings. So you have extra volatility, right? You have volatility as a result of the earnings, and you have volatility as a result of macroeconomic uncertainties. So this is a good time to sell premium, right? Because there's a lot of premium in these options, and this is something that you might want to consider. If I trade, you will see usually it's a one trade a week. I trade spreads. In case of JP Morgan, I sold iron condor. I sold a put spread and call spreads. JP Morgan, let's see, how are the banks doing today? Probably not well, right? Since yield is up, so you can see, we had a nice recovery on Friday, but then drop, all that is gone, and we actually made new lows in JP Morgan, and same thing could be said about Citigroup, Wells Fargo, Delta Airline also pulled back, Morgan Stanley, as a result of earnings, also pulled back. So you can see banks are getting affected the most as a result of the rise in yield, right? The rapid rise in yield. Any other questions? And finally, weekly power trader. Profit accelerator. So profit accelerator is where I actually trade stock and options. So you can see Amazon, Cisco, JetQ, stock positions. You have a hedge. You can buy QQQ put spread. If you can't buy QQQ put spread, you can buy PSQ, right? If you're not comfortable trading options, instead of a QQQ put spread, you can buy PSQ. And you can see PSQ is up inverse to the QQQ. So if your QQQ is down 1.5%, PSQ is up 1.5%. So if you're not comfortable trading options, one of your positions could be PSQ or SH, right? Inverse ETFs. A lot of people like inverse leveraged ETFs. I usually stay away from leveraged ETFs. I would rather trade options. But if you need more leverage and you want to take risk, then you can definitely buy leveraged inverse ETF. Any questions so far? Alex, Alan, Ashana, David, Jeff, Joe, Dr. Simon, Ronald, Tony, TYR. All right, we have a lot of new people. Thank you for joining. All right, so a few announcements. If there's no other questions, one is I encourage you to schedule a one-on-one consultation with Keith. He's our Chief Investment Officer. He's doing a live trading room. We rotate, and you can pick a time that's convenient for you, schedule 20 minutes, and he can help you approach your portfolio, how to rebalance your portfolio, how to hedge your portfolio, He's expert in options trading. He has a lot of background in market making and hedge funds. So I think it's a great opportunity. It's a free consultation. You know, I can schedule 15, 20 minutes and talk to Keith. If you are looking for one-on-one coaching, he can help you also spend more time. And, you know, if this is something you're looking forward to, one-on-one coaching. Also, you already see Vanguard, right? So I'll put that link here. So I would definitely take, you already invest in time in the education and webinars. This is something that I would consider doing. Is this week a good time to play options with noise from the trade war? I mean, if you're a premium seller, right? If you like to sell premium and you're short-term aggressive trader, this is a good time to start thinking about options. I mean, obviously, if you sell premium today, but there's escalation and VIX jumps, then you could be, you know, that's also could be an issue. But like earnings strategy, I think is a good time because the volatility is elevated, so you can sell premium, and you have dual effect of uncertainty due to the earnings, but then uncertainty due to the geopolitical risk. So selling premium on copper FCX, especially if you want to own FCX, right? You can say, you know, copper prices are going up. Doesn't matter if it's geopolitical risk or, you know, because it's used as a hedge against, you know, uncertainty, even though it's you know, and you want to own it. This is the perfect time to sell premium, right? Because if you get a sign, let's say, you can sell. FCX usually 10% move, so you can probably sell 54, right, or 55 put spread, right, by sell a put spread and collect extra premium, right? So that's what I would consider. Any other questions? And then if you do want, if you're looking for, you know, to open up account to trade stock or options, you know, you already seen Vanguard. We have marketing relationship with Vanguard. They do specialize in the auto execute service, right? Broker assisted trades. So if you want to auto execute our signal, or if you want to, you know, just have another account where you can monitor yellow tunnel signals for different subscriptions, then I'm also going to put that that link, and you can get I think, what do we say, 90 days, 3 months. So you can get any yellow tunnel subscription for 3 months. If you fund the account, if you fund the AGT account, you get 3 months. And you pick any service, we'll give you for free, right? We'll refund your first 3 months payment. And this is a good way to trade lower commissions, zero commissions on equity option trades. That's the link. All right, any other questions? So my approach, I would consider raising cash. I think raising cash makes sense. So I did close the JPQ, Morgan Stanley, RTX, and this is something that I would encourage you to consider. And you already seen, sorry about that, you already seen some of the strategies that I did in Dynamic Power Trader, right, by, you know, in the orders from today. Any other questions? All right, and, you know, if anything, you know, talk to Keith. You know, he can explain you our program. He can explain you some of your services, you know, what suits you better. And that's also a good use of, you know, your time. You have a lot of people, a lot of new people. Thank you very much. I appreciate your time. And same time, same place next week on Tuesday. We also have webinar on AGT platform on Thursday at 12 o'clock. I encourage you to participate on that event too. We're going to talk about earnings season, selling premium. So Thursday at 12 o'clock Central, or next Tuesday at 12 o'clock on Yellow Tunnel platform. Thank you very much and have a great day. Thank you.